What's up, guys? Zach is back with another episode of Journey to $1,000,000. And hey, today was not, well, yesterday actually was not one of those good days where we got so much to be proud of. But hey, our hedges went all right. Everything was down except for the financial sector. You know, those good old cyclical Wells Fargo, the Bank of America. Hey, they weren't so bad. But yeah, those growth and innovation portfolios suffered a little bit. So let's go ahead and jump right into it. Just in case you missed it, S&P was down 1.5% almost, Nasdaq was down 3%, and Dow Jones was down almost 0.5%. And we pretty much didn't have anything going our way except, like I said, the XLK hedges, which is the XLK is the tech sector ETF. Those were actually up 1,300% yesterday, so it was okay, but they were down so much that the 1,300% didn't really even affect it so much. But of course, in times like this, I would still recommend getting some sort of hedge position, no matter if your portfolio is heavy tech, get an XLK hedge. If your portfolio is heavy semiconductor, get a semiconductor hedge. I mean, whatever you're rolling with, you should get something to protect yourself at least a little bit. But nevertheless, beside the XLK, our eBond, which is eBong, the Chinese company that makes the ASIC miners or the Bitcoin miners, it's actually down 11%. So that helped us out, which we were predicting this price to pull back for the eBong. So we had bought puts and they were up a little bit. So we're doing all right. And then of course the FAS, which we had positions in before, they were also up a little bit, almost 2%, and SRPT, which actually was down a couple of percent, but then in the after hours, it actually went up like 5%. So starting to go the right way. But anyways, we're going to keep watching those. And it's tough times in the market, so I can tell you it's tough times. My portfolio it went from just a pretty good week, actually coming off that pretty big dip. And I mean, the dip is as big as the September one. So, you know, that's a pretty big dip. And oh man, so we were having a pretty good week, and then all of a sudden we were down 10,000. So hopefully today, Friday, we can bounce back a little bit, which it seems like futures are heading in the upward direction as of right now when I'm making this video, which it's only like 10 minutes till market opens actually. So we'll see how it goes, but overall I feel pretty good about it. But nevertheless, it's a little bit tough, and you know, I was trying to watch some news, read some articles, and see what's the biggest catalyst for the just basically everything. I mean, at least like for sure the TNX is going up. You know, the TNX peaked at like 1.75 yesterday. That's the thing. 1.754, and then it finally pulled back to about 1.73 for the market close. So it's definitely still going up. There is no doubt about that, and it's past the pre-COVID levels. I mean, you know. So I mean, beside the TNX just going up, I mean, what other catalysts are there for the Dow being down? A lot of cyclicals are down. The only thing good is financial sector, which is, you know, obviously it's because the 10 years are going up. But you know, so in the news, and I don't know about you guys, but I've been hearing about it almost basically all day long, is this Chinese-U.S. meeting, which is the first meeting for the Biden administration when these two superpowers are getting together and meet. And you know, I just don't know. And they met in Anchorage, just in case you guys haven't read the news, and it was pretty tense. And I don't know if this is the catalyst, but you know, nevertheless, it didn't go very well, and I personally don't think that is the sole reason, or maybe even any reason at all. But yeah, I mean, if you look into this, then you know, I don't feel comfortable owning the Chinese stocks right now because, you know, at least for, you know, I thought that because, you know, I've lived in China for 10 years, so I thought that when Biden was going to be elected president, and I think like, okay, well, at least the relationship would be better between China and the U.S., and I don't have to hear about Trump this, Trump that every single day as living in China. But turns out it's worse. Turns out it's worse, which is so hard to believe, but the current administration has taken a pretty tough stance on China. With rhetoric, and then they've sent the aircraft carrier in the Taiwan Straits. Well, that was like the first couple of weeks when Biden was elected. So, and of course they confronted the Xinjiang issue, the Hong Kong and Taiwan issue. So I mean, it's pretty tense. And if you guys don't know, China does not recognize Taiwan. So that's that's kind of a problem. But I would like to read to you guys these quotes. This one I actually just took straight from Bloomberg. The first high-level talks between the U.S. and China since President Joe Biden took office immediately descended into bickering and recriminations, with each side sharply criticizing the other over human rights, trade, and international alliances. So I mean, it's basically the U.S. saying like, oh, well, you're violating human rights with the Xinjiang issue. And then China's like, well, what about the Black Lives Matters? So, I mean, it just goes back and forth between, just like Bloomberg said, it just bickering. That's all it is. And then actually the envoy, the Blinken, he said, and this is exactly how I feel about it. He summed it up in this quote. The United States delegation came to Anchorage committed to laying out the principles, interests, and values that animate our engagement with Beijing. We have continued on our planned presentation knowing that exaggerated diplomatic presentations often are aimed at the domestic audience. So that is, the exaggerated diplomatic presentations often aimed at domestic audience. That is, he really hit the nail directly on the head here, because as I know, living in China, they want to, it's just a show of, they're constantly competing to, they're really concerned at being better than everybody, especially the U.S. So they're overly concerned about it, and the news is just constantly about the U.S., and no matter if it's Trump or Biden or whatever. So, for their domestic audience, they want to get everybody on board. They want to show that, hey, our government is a very strong, 99.999% of the population supports our government, and, so this is more of a planned presentation for the domestic audience. I totally agree with that, and domestic audience is the Chinese population, because they were loving it today. They were loving it. They were pretty much like, yeah, we're not going to be pushovers, like, yeah, just give it to them. That was the overall sentiment. So the reason I am bringing all of this up, which is not specifically to do with stocks, but actually these Chinese stocks, if you're owning Alibaba, if you're owning, Pinduoduo, I see a lot of people getting into these days, or JD, Jingdong, just be a little bit careful. Of course, Neo, Li, Xiaopeng, all of these things. I would be a little bit careful, because the Sino-U.S. relations are, in my opinion, probably going to be worse than they were with Trump. Although maybe not in your face worse, with Trump, but I think it's more of behind the closed doors. These relationships, or the relationship, is going to be strained. But it seems like they are letting everybody know that. So I don't really know. Nobody knows what's going to happen, but since I cannot predict the future, I would say it's safer not to get into these Chinese stocks right now. At least let it be for the meantime. But of course, there is always the C-Web, which I'm always interested in checking out, which is the Chinese web giants. And yeah, they've pulled back pretty hard, as you can see. And this is an ETF. It's a 2x ETF on the Chinese Internet Index, I guess you could say. But this has really suffered the past 2 days, which makes a lot of sense to me, seeing what's happened in this Anchorage meeting. And it seems like they're still going to be meeting tomorrow, so we'll see how everything goes. But nevertheless, I would just be a little bit careful. And then moving on to the next point, and the last point is, the cyclicals, I just really got to thinking the cyclicals thrive in an environment with high yields, but it gets to a point where, do you guys really want to be buying overpriced Wells Fargo? do you really want to be buying these overvalued stocks, the cyclical stocks? Sure, they're doing well right now, but eventually this is going to get to a point where the fear of inflation, fear of the rising 10 years are, it's going to be priced in. So, and I don't know if it's going to be 1.75%, if it's going to be 2% or 2.25%. We cannot say that, but what I can say is eventually this is going to get priced in, and it's most likely it'll be priced in before it actually gets to that interest rate. Which is, since the stock market is forward thinking and forward looking. So I do believe that. But what we do know is that eventually it will get priced in, and eventually the yields will stabilize. So there is a light to the end of the tunnel. Maybe we cannot see it so clearly right now, but in my opinion, I don't want to put money into the cyclicals, even though all of the news, all the talking heads, they're all telling you sell your tech, sell your growth, put your money into cyclical stocks. And energy just got crushed yesterday. So of course we'll see how it turns out today. But nevertheless, in times like this, I like to look towards Amazon. Amazon first IPO'd in 1997, and I examined the chart, and we can see that since after the dot-com bubble, which was in 2000, Amazon lost more than 30% or more than its value 10 times from today until the early 2000s. So the point is, it's very normal for these high growth stocks to pull back 30%, especially when they're first starting out, like maybe Nano Dimensions, or maybe you're into the GEVO, or maybe, whatever, Palantir, whatever you're into, it's very normal that these stocks pull back 30%, 40%. Some are going to pull back even more. And even Amazon pulled back 50, 60% at one point in the early 2000s. So, and Amazon is the company that has made arguably the biggest impact on our lives in the past 10 or 20 years. And it's never at a point where it pulled back 30%, where it would have been a bad decision to buy the dip. So really, my point, what I'm trying to say is, I know a lot of people are really worried, they're scared that their portfolios are getting beaten up, but I look at it as an opportunity. These growth stocks that you have really high conviction towards, you shouldn't be scared to buy them if they're 30% down. You should look towards the future, keep looking toward the future. You should know that eventually the yields will stabilize. It's not going to go forever. And at least the fear will be priced in and whatnot. And, especially Amazon was one of those ones where people say, well, if I had just bought Amazon, or, oh man, I missed buying the Amazon, I should have done that, or, wow, if I still had my 1,000 shares in Amazon, I would be a billionaire today. You always hear these type of conversations. And a lot of the times it comes up with these high growth stocks, like for an Amazon, for example. So, I'm just saying, don't miss your chance to buy Amazon at a 30% discount. That's all I'm saying. Think about it though. Cyclicals, the 10 years, the growth stocks on sale. All I want you guys is to think about it, make your own decisions, draw your own conclusions. I mean, does the 10-year going up from 1.3 to 1.7 really affect Apple to so much where it's going to lose 30% of its value? Does that actually make sense? Draw your own conclusions, guys. I'm just saying. For me, I'm going to be dollar cost averaging. We'll see how it turns out today. But hey, once again, I appreciate you guys tuning in. I'm not throwing any on to the watch list today because it's one of those days where the markets are pretty turbulent, choppy waters. We might have to activate Titanic mode soon. But anyways, follow me on Twitter, follow me on YouTube, smash that like button and subscribe. We're growing so fast. And if you're wondering what broker I'm using to trade on, it is Webull. All of these charts, everything you're seeing here, I do on Webull. And if you sign up now, you get 2 free stocks for guaranteed for sure, which is probably going to be about $20 if you deposit $100. So that's a pretty good ROI. It's like 20% ROI. Also, you have a chance to get Google, which is like a couple $1,000 right there. So, and I've seen some people. I haven't personally got on Google yet or Facebook, but I've seen people that have. So it is real. So go ahead and use that link in the description. Smash that like button. And guys, I will see you on the other side. Peace.